Hi everyone and welcome to my daily morning market uh, Charles appraisals with me, Richard Perry, market analyst at Handset Markets on Tuesday the 16th of February. The big driver today is this oil price, and the oil price has in the last couple of days has been pushing higher through the suggestion that there was going to be a meeting this week between OPEC and possibly Russia, and that has happened today. And we're now getting fallout from that meeting because it seems as though they've sort of agreed to hold production levels at January levels. Um, so, in summary, I suppose that really means that they're not increasing production, which is, I suppose, is a good thing. But I think the market has taken that as a bit of a negative, really. I think the market was sort of over thinking that maybe they were going to be cutting production, and they haven't necessarily done that. They're just freezing production at January levels. So it's a bit of a disappointment, really. And the strong gains that we saw in the oil price this morning have sort of unwound. We're seeing what had been earlier strong retracement of the risk trade. The strong retracement of the safe havens that we'd seen last couple of weeks, which had been unwinding in the last few days. That's reversing again, I mean, for example, gold that was down quite strongly is now only down a couple of bucks as I'm speaking, and also obviously the big mover being oil. Oil having unwound that move. Let's look at treasuries. Treasury 10-year. Yeah, sort of day low, but obviously still higher. Let's look at the 2-year. Yeah, day low as well. So they are reversing this move. And it certainly seems as though the market has been disappointed by this now. Is this now the end of the rally? Is the question. We had got previously a nice rally on equities continuing today. That has now reversed, and now FTSE and DAX are both trading lower on the day. So really interesting that we're seeing these moves today, and it's all been driven again by the oil price. Now, it sort of certainly seems to be setting a pretty negative sort of tone, or certainly not positive tone anymore, and it'll be interesting to see if this continues. Now, we've got a fair bit of data out today. Actually, we've got the start off with the UK inflation data at 9:30. Now that's expected to come up slightly higher on the year-on-year data to 0.3% on the year. So that will actually be the highest since January 2015. Interestingly. But the core data is expected to just come off slightly to 1.3%, so that would be a touch of a disappointment. But certainly, at the moment, sterling is higher in front of the data, back above 45 figure 145. We're interested to see how that reacts at 9:30 when it comes out. And at 10 o'clock, we've got the German ZEW economic sentiment, which is forecast to come in at plus 0.1 or maybe even flat, which would be the lowest since October 2014, if that were to be seen. That month back in October was 1.9, so that would be a bit of a disappointment. There are certainly trends that develop from the ZEW that follow through to growth in Germany. And this afternoon, the NAHB, the National Association of Home Buyers Housing Market Index, is forecast to come in again for third straight month at 60. But certainly this oil price is the driver today. Now we've got the FTSE 100 as my chart of the day, and we've had this rally in the last couple of days, and that has certainly been driven by that oil price, that 10% massive sort of over that double-digit gain on oil on Friday. Continued oil price rebound yesterday and early today, but it's just come off the top, hasn't it? And I've been talking about the fact that rallies are a chance to sell, and you've still got what this is a big downtrend channel, isn't it, on FTSE now? 4 or 5 months of downtrend channel. We see the lower highs and lower lows continuing to track lower. Momentum indicators continuing to fail around the 60 point. MACD lines falling over at lower levels. Stochastics have turned up though in line with this little mini recovery. So I think this is ultimately going to be another rally that gets sold into, really. And could it be that already we've seen the rally with this sort of arguable disappointment from today's meeting between OPEC and Russia? got the move near term there above 57.68. Let me just move that 57.68, which is the old floor, which had become a bit of a pivot line. Move back above that is a positive move, and at the moment we are tracking higher because obviously there is further unwinding that we could see in this in the RSI, only around 50. Recently it got to 55, and then previous to that 58, 59. So there is possibility of further unwinding. And just looking at this chart, you've got 59.45 as the reaction high. Now let me show you the intraday chart, the hourly chart, which you can see here. Has potential for further unwind. 59.33 was a bit of a breakout level near term, but has become a bit of a sort of old pivot level. There was a near term breakout above that, became supportive, and then resistance again. So 59.33 is sort of a pretty decent area that you probably start to look at selling opportunities. I think this hourly momentum's already reached overbought and started to roll over, interestingly enough, as well. So maybe the prospect is that this recovery has already run its course. Is possible. Although I'd be a bit more comfortable probably up towards that 59.45 area. As I said, 59.33 on that hourly chart. So anything above 59 figure, I think, you're starting to get pretty heady, and certainly within the scope of the last 4 or 5 months, these rallies continue to be sold into. You've got the 55-day moving average around 6,000 currently, which is becoming sort of a basis of resistance as well. So there's several reasons why I think this rally is going to get sold into, and you need to sort of be aware that if you're running long positions, just be careful of those positions anyway. So I wish you good luck in your trading today, and I will speak to you later. Thank you.